Hey traders, this is Houston Trung from thetradingedge.org, and here is your weekly market outlook for May the 11th to the 15th, 2020. And so, if you feel like you're having a bit of cognitive dissonance, you're probably not the only one, because we're seeing the markets now really trading in stark contrast to the overall economy. So it appears right now that the markets are pricing in a V-shaped recovery. In fact, stocks this week spent most of its time basically recovering all of last week's losses and shaking off any fears of a May effect. So the bulls are certainly in control right now of the equities markets. We're rallying, it's trending up, and it appears that we're going to go back to all-time highs. Now, contrast this with the overall economy. The jobless claims numbers, although not as severe as some would have thought was going to come out this week, we're still trending around 20 plus million people unemployed for the month of April in the United States. No immediate vaccine that's going to be coming out anytime soon, and the GDP number was pretty weak. So we have a real contrast between what the stock market's doing and what the actual overall economy and fundamentals currently look like. So this is where a lot of people can trade, and traders especially, as I'm talking to traders here, we can get in trouble, right? It's important to have the ability, the skill to differentiate between your personal bias and what's unfolding in the markets, and not having your personal opinions encumber your ability to see the markets objectively. And this is why although we try to inform ourselves, in our community, in my trading community, about what the overall fundamentals are, price, in my opinion, ultimately leads. And oftentimes, the news will break with the price action, or the price action breaks before the news. So the market being the accumulation of all market participants' information, we usually find that a lot of the news and a lot of the information is already baked into price. So price oftentimes leads the news. So it looks like right now, based upon how the markets are reacting and how it's trading, is that the markets are pricing in the potential for a V-shaped recovery for the economy. Now, will that happen? We won't know, right? That's not we're not trying to predict what the economy is going to do. As traders, we're trying to put on good trades that have asymmetrical reward to risk potentials, reward to risk structures. So we are not in the prediction game, and this is why we need to be able to detach ourselves from that so that we can properly examine, analyze, and take trades in the market. So that out of the way, a small preface there around seeing the markets for what they are, seeing what the markets are there for, and just seeing the markets as traders. Those are three separate things. So let's talk about the econ calendar this week, and then we'll launch into the charts as we always do. So for the coming week, slower news flow in terms of the econ calendar. CPI number on Tuesday morning, 8:30. Then we have the oil number. Will be interesting to see because oil has seemingly bottomed at this point, and I'll show you some charts later on at 10:30 on Wednesday. Jobless claims number once again on Thursday, and on Friday we got the retail sales number, and a lot of retail companies, even though this is the funny part once again. Even though the economy doesn't seem to be open right now, it hasn't stopped markets or stocks from flying higher. So in a very, very strange sense, stocks don't even need to have these companies open for business. We're just basically trading on the potential for earnings. So that just shows you, how far stocks trade ahead of the actual present. So never forget that stocks are a discounting mechanism or a pricing mechanism for future earnings for many of these companies. So that being said, we got that retail sales number on 8:30 on Friday. Interesting to watch that because a lot of retailers have actually been doing pretty well. So earnings calendar, less busy than this past week, but we still got a lot of earnings names. So definitely keep an eye on that. Quite a few reporting on Monday. So as usual, I'm not going to go through all the names, but definitely check your earnings calendar to make sure you're not taking any unnecessary risk. So with that being out of the way, let's launch into the charts now and start, as we always do, with our friend the VIX, and then we'll go through our usual watch list of assets. So here's the big picture for the VIX, right? So this is pretty much everything you need to know at this point, because volatility has basically come out of the markets. That means a lot of the fear has come out, and now what we've seen in the past week is that you're getting paid to take on overnight risk. Because volatility has come out of the markets, in order to get the same amount of range, in order to get to capture potential reward, a lot of the moves have been happening overnight. So this is what you often see in a normal environment where volatility begins to shrink. That is, in order to earn a reward, you actually have to take risk. That's how the market usually works. Unless you take a risk, you cannot make the reward. Because the ranges are coming out of the markets, we're seeing lower ranges intraday. It means fewer trading opportunities for intraday traders, and this means you need to take a wider time frame approach, and so that means taking on overnight trades. And we're seeing more and more overnight returns. That means you see a lot of stocks gapping up overnight, and a lot of folks are making their returns by holding on to positions now versus simply trading them actively intraday because the ranges are tightening. So you can see the vol. When I say vol, I mean volatility, not volume. You can see the vol coming out of the markets by looking at the VXX. Look at this. One huge month we had, in March, right? That was a big up month. At one point, it was up close to 200%. It cannot break and stay above that Bollinger Band, right? So it closed right there. Inside month for the month of April, and look what it's done now. Up, inside, down. So it come back to the range again, potentially taking out this low here, coming way back down here. Guess what? If it comes back down here, markets are going to all-time highs. So that means vol has basically left the markets. So the month of May starting off very, very well for bulls of equities. The vol sellers have come back in and they're selling this VIX product, and it looks like we're going to come back to the range again. So that's your monthly outlook. Well, that's your monthly view. Here on the weekly view, this is what we were waiting for last week, right? We wanted to see, because last week was a bit of a scare for a lot of people as we were entering the month of May, and people were scared to sell in May and go away effect. And the markets were throwing a warning sign because the VIX had shown a big strong hammer, right, after showing a shooting star, and that means the equities were the opposite. We had big shooting stars, and the VIX had the opposite with a bullish hammer. Now, this is the best case scenario for the bulls in terms of what happened this week, meaning with the gap, the VIX up, and immediately, we'll see the equities in a few moments here. I'll spend a bit of time, as I always do, on the VIX, and then we'll flip the script and go to the equity side. But it popped up, and they immediately sold it. So they immediately sold it and took it back to the entire range. So anyone who bought this break, they're like, okay, gap's up here, it popped above the prior week's high. They're gonna come, they're gonna buy it and maybe come back up through here. They were immediately wrong, right? And they got slammed to the downside. And not only did they get, did we take out, they couldn't come back in the range, it actually went through the entire prior week's low, right? And prior week's range, and then through that low, creating that outside bar to the downside. That's an outside bar to the downside. Very, very bullish now for the bullish for equities, bearish for the VIX. This here is a potential for that Momo down move next week on Monday. If we break below this low here, it's Momo down. We can see momentum begin to accelerate to the downside if we get that Momo down condition. Okay, so that's what we're watching for now. Let's readjust our ranges. So we want to see how we trade in relation to this past week's range and how we break out of that. Now, if it goes the other way, it goes outside bar up somehow, right? It goes open somewhere in here, and all of a sudden during the week we see ourselves pop up and come back up here. That'll be interesting. But right now we have full time frame alignment at the downside. This is what I was saying last week. When you're watching this here, I remember saying you still have that blue line right there. What's that blue line? The quarterly open. What's it going to take to make that quarter turn it red or turn it green? A lot, because the quarter looks like this. I'll just adjust it and see if we can make it bigger. Or there we go. See that quarter there? We're still outside inside on the quarter 3-month chart. It's going to be very difficult for buyers or sellers to turn this something other than an inside bar, right? Because you have a huge 200% Q1. So how do you get outside that 200% range in Q1? That's going to be very difficult for that quarterly chart to pull that off. So that's why when trading below the the quarterly open, you have that bias now. You have that a bit of bias to the downside until you can break above that level, and it could not do that so far, right? So it's stuck below that. Now trading above, below the quarterly open, below the monthly open. You got full time frame alignment to the downside here. On the daily front here, we had some unfilled gaps that we had to take care of, and that's what they did. So on Monday, and I'll show you this in a few moments here, what it looks like intraday, because it's a great reversal signal. So there's the outside bar to the downside on Monday, right? So they gapped it up a bit and they immediately sold it, all right, back through the range. See, there's a unfilled gap right there from last Thursday. They filled that on Tuesday. Okay, so outside bar down, that's Momo down. They bought it back on Wednesday a little bit. It scared some people on Wednesday, but then basically on Thursday, Friday, VIX melted. We filled that gap that was there, so now we can remove some of these gaps. So there's actually a gap right here now. So there's a gap there, and we'll move this gap here. There's actually a gap right there. Okay, and so now we have another gap here at 34.11, I believe. Yeah, and we've been watching that gap for a long time, right? I'm like, this is going to be they're going to fill it at some point, and it's happening slowly. You can see now it's just a series of lower highs, right? High, lower high, lower high, lower high. So we're slowly edging our way down. It's taking time, right? This is what you expect, but this is how volatility begins to slowly ebb and flow of the markets. Each consecutive high is lower than the prior high. And that means there's more and more fear leaving the markets. The buyers have less and less strength, and they're unable to break above the prior pivot highs or swing highs. So, essentially we're going to come, very likely chance now we take out that 34.11 area. We've got another unfilled gap right there at 29.82. Okay, there's your 200-day moving average. So on the 4-hour chart, just to take a look at that one really quickly, looks like so. All right, so going into last week, we got that Momo down condition. It was going Momo down. Sorry, up here. This is this week. Was inside bar and up on Monday. See that? So went inside bar and up on Monday, and then we started the Momo down condition, right? So they sold it immediately, like I said on the daily chart, right? So they popped it up. It's a gap up here, and then it goes red. Inside, outside bar, and then it breaks below that bar there. That's Momo down, full time frame alignment. Look, purple line. That is your weekly open. Orange line, that is your monthly open. Okay, we know the quarterly open's way up here. Okay, so you have full time frame alignment. So if this thing breaks below here, there are no time frames that are showing green. Right, it's all red. Quarter's red, month's red, week's red, day is red. So it goes outside bar down, Momo down. Okay, pops up a bit here, right on Wednesday, give people a little bit of scare. But as soon as that guy breaks down here, okay, it's back down again, because that is going to pop up, comes back down, and going to take out that pivot there. That's what they did right there. See that pivot there got taken out by this bar. Inside bar down to close the week on Friday. Closes near the lows. So we can't ask for more if you're a VIX seller than that. Volatility is basically leaving the markets. So let's talk about the SPY now. Let's talk about the reversal that happened on a couple of charts, and we'll go a little faster because we know the bigger structure. So one thing I want to point out though is that all the indices except for the Russell look like this. Okay, so they all look like outside inside. All right, so it's outside inside on the quarter. So here on Q1 of this year, we basically had a 20% drawdown for the SPY. It did pop up significantly, right? We drew that broad information. It held, so it's popping up through the range now. Outside inside, anything's possible. How probable is it? I think it's gonna be very difficult for the buyers to take out that pivot high with 52 days left. Not saying it's impossible, but I think it's a long shot, unless the buyers really step up and maybe something really the fundamentals really change. I think we're gonna stay inside quarter, and then perhaps do an inside quarter and up, or even another inside quarter in Q3, but that's down the road. We don't have to worry about that yet. For now, we're trading inside quarter, and this means we have to expect at some point, if it stays inside quarter, we're gonna get a reversal. Okay, so if it doesn't keep moving up, we're gonna get a reversal. So just be aware of that. For now, though, we have this. Looks very, very bullish right now because it goes outside bar down. That's your Momo down condition. Inside the month of April, right? So the buyers fought back. They close it back in the range again. And now we're very close from this bar taking out that prior pivot high. Okay, and once that pivot high gets taken out, they're going to go after that one and then potentially that one. And that takes us back to those all-time highs. So looking very, very strong for the SPY. Okay, so that's the condition. Momo down, inside bar. The Momo down condition hasn't been extinguished yet. We got to take out that high there. the high gets taken out, then we're going after those prior pivots. The weekly, here's how that shooting star got negated. How do you negate a shooting star? Well, by doing something like this. Okay, so we drew on our ranges last week. We said, okay, if it's going to break below here, that's going to be the pivot they go after. But the buyers immediately defended. This is the best case scenario for the buyers because they stepped up right away and they trapped some folks as well who tried to go short. They tried to sell this low here inside buy reversal and they got run over, right? If you didn't cover, you took that weekly signal to the downside, you try to sell this short shooting star, you got run over. Especially in the Qs, it actually went, I'll show you in the next chart, but it actually went outside bar to the upside, so they got run over on the weekly time frame. Okay, so that's your chart there. It did go two up, and then it went up here and then went down. Okay, so now what's the next bar? So we'll redraw our ranges here. Alrighty, and at this point here, the buyers are very much in control. So this is what this is it. All the indices, basically, most indices did the same thing. They all pulled off the reversal on Monday. Once this reversal happened on Monday, it was a straight shot to the upside. There were no lower days after Monday. So here on Monday, right, it gaps down. All right. So actually, I want to show something here. So I want to draw on the prior week's low. So I want to leave this prior week's low right there. I'll do a couple examples of this because it's a good reversal pattern. It's a good one to have in your playbook. So that purple line is the week's low. Okay, so that purple line right there, that's the prior week's low. I'm just going to make sure it's, so that was created by the prior Friday's low. And on Monday, you can see right here, it gaps down. As soon as it opens, it makes a slight lower low. And it touches this green line. What's that green line? That's the 20-day EMEA, right? So we're trending now, right? So this is a trending market to the upside. So people are literally buying that tap of the 20-day EMEA. So there's traders and algos and whoever using moving average methods, they're literally buying that exact pivot there, that exact area there. Okay, so it breaks down, comes up right away, and then it comes, and then we've had an up day, inside, up, up. So there are no lower lows all week. So even though these days are staying red, like they open up slightly, but they're closing basically flat or red on the day, there are no lower lows on this week, right? So you're above the weekly open, now you're above the monthly open, and you're way above that quarterly open, full time frame alignment to the upside on that SPY chart. So what does this reversal look like on the intraday? This is what you need to see here. This is a very nice pattern because this is probably best known as a red dog reversal, right? So it's a red dog reversal, and there's it's a nice pattern when it works. Like all patterns, nothing is ever universal, never works 100% of the time, but it's a useful pattern to get to know because enough people are trading it and looking at it that it's important to have in your arsenal, or at least understand what the mindset is of other traders and what they're doing, because the more exposure you have to other trading strategies, the more you can understand who's currently in control of the market. Because once you get a reversal that sticks like this one here, you can expect a multi-day rally. And, I was calling for a multi-day rally once this reversal happened. I called this out in the chat room that I manage, that I have, and I said I was expecting a multi-day rally with the potential for this thing to reverse later in the week. The only issue is that if you reverse later in the week, you're still going to be fighting against the time frames, because if you break below, let's say if you make a low on this day and it breaks down, you may be below the red, be below the monthly. It'll be a red month, but you're still gonna have a green week and a green quarter. So that's mixed time frames, and it's not a smooth, it's not a smooth trade because you have time frame conflict. The best case scenario is when you have all the time frames working in your favor, and that's when you get trades that move quickly and fast and easily. This case, we did not get that signal to take a short, and even if you did take that short, it's not with full time frame alignment, so there's not a lot of conviction there. And clearly the markets have been trending to the upside, so you got to watch out for that. So let's talk about that reversal, because if you don't know the red dog reversal, it looks like this, right? So let's go to a 5-minute chart. Let's go to a 15-minute chart first, okay? 15-minute chart, we'll find this day here. We did the reversal right there, okay? So right here is the day we do the reversal right here. So here's the sequence. Here's your Monday. Okay, so here's the prior Friday. We gap down. See how we gap down on Monday? We gap down well below the Bollinger Bands. Okay, so that's a very quote-unquote oversold condition. And it has to, if you know anything about Bollinger Bands, it has to start doing a Bollinger Band walk, because that means it has to stay below the Bollinger Bands, because once it pops out of there, that's gonna, the method is that people are gonna buy it. And so that's another, understanding, is that there's enough traders looking at that method as well. So you want to know what people are doing. So that one method is if you don't stay below or above Bollinger Bands, there's going to be these traders who step in, who use those methods. They're going to buy it up and look to to push markets higher. So you need to understand those traders, and that's the effect here, right? So here, that's your prior weekly open. The weekly low. So gaps down below there, and then immediately comes up. The red dog reversal is, once you come back and touch the prior day's low, that's a buy signal. So here, that bar there, see how it gaps down and it comes back up and touches the prior day's low? That's also the weekly low, right? That's the prior weekly low. That's your buy signal. You put your stop below there, right? So this is the kind of trade that you would kind of put on there. You'd put your stop now below the low of the day. You'd buy that level there, and it turns out to work pretty well for the week, because it never came back to that level and ends up going close to plus 5R for the week. So not a bad trade to put on Monday, and to basically hold it all week long. So this this setup this week turned out very well for any folks who took that red dog reversal. Another more aggressive trade is simply a red to green trade, right? So simply you wait, the market gaps down, and then you're waiting for the asset to go green. So here, that purple line is your weekly open, right? That's your daily open and weekly open. That's where it opened up on the day and on the week, right? So gaps down, they sell it lower, but immediately the buyers push it back, creating a stalemate. And as soon as you go back and touch that purple line, that's your open, and it breaks above, it turns from red to green, and there's your buy. Again, your stop would be below the day's low. So that's a little bit more aggressive, even, because in this case here, you're not even buying the prior day's low, you're buying it as soon as it goes green. It's a little more aggressive, but then you get a bigger payoff, right? So look, if you buy it there, it goes 5R within 2 days, right? So not on the same session, but the next session gaps up, right? Squeezes anyone who didn't cover. So any shorts who got short down here, right? Shorting down here on that gap down, they got squeezed immediately. So they got squeezed on the same day, and if they didn't cover them, that same day on Monday, you got squeezed on Tuesday, and it was very, very painful if you were short there. They basically squeezed them all week. So that's what happened on the Monday. So even a lower time frame, this is what it looks like. It's really nice to watch, to look at lower time frame things, so that you understand the concepts. You just have to act more quickly if you're going to be taking these intraday setups on a lower time frame. So here's the red to green setup, right? So here, same situation. Red, I want to center it so you can see it better. All right, here. You can see it gaps down. The sellers push it hard, right? 2 red bars, and then it goes green. The buyers pull it back again, and that's where they actually turn the day green again. So red to green, there's your risk to reward, and that's how it plays out in the 5-minute. The red dog reversal, don't forget, it happened here. All right, so there, roughly, let's just put it, let's put our risk right there. Okay, you buy it when it goes back to the purple line. So there's your red dog reversal, and that's the one that moves 5R on the week. Okay, so a very nice sequence. Same sort of pattern, right? The sellers, they ran out of steam, and the buyers bought it back aggressively, and then it never made a lower low, right? So here the sellers got back involved again. Once again, broke below the Bollinger Bands, could not do the Bollinger Band walk, pops back up, and it's gone. So that was, if you were short, you were really hoping this was the sequence, right? That was going to be the sequence that was going to turn things around and have some follow through for your shorts. Did not work out, right? So here, right there, it goes inside bar, down, inside bar, back up, and it's gone, right? So that's your the reversal on the SPY. And now, just looking at the bigger picture, it's called the SPY on the 2-day chart. Delete this the risk to reward profile there. Yeah, it looks like we're going to take out April's highs, right? So getting, we're just making higher highs now, and we're getting very close to taking April's highs. And don't forget, that orange line, there is your monthly, the prior month's high. That will trigger, if you break above that orange line, that inside month and up on the monthly chart. Okay, so now we spent a bit of time talking about that setup. Let's fast forward now and go through some of the other indices. I'll do a little more quickly now and not go through all the talk we did before. So Qs, exact same structure on the quarterly chart. Here's what I want to point out: Qs are very, very strong. So unlike the SPY and Dow, those guys have an outside bar down, inside bar. The Qs already broke above March's highs. They did it back in April. And now we're rocketing higher. So in May, it's already broken above April's highs, and we're getting really close to going back to those all-time highs. We're seeing a lot of names this past week getting back to all-time highs. So, the shot's already been called, and they're making their way back to all-time highs, only 5.6% away. Would not take much to go back up there for the Qs now. It looks very, very likely that we could go back to all-time highs on the Qs. Okay, so there's your monthly chart. Weekly chart, they did those bears dirty here. They really crushed them. It went inside bar up, right? Sort of a shooting, not even a shooting star the prior week, but did do inside bar reversal, but they bought it back right away, just like the SPY. But unlike the SPY, it actually went outside week up. So they squeezed them. If you did not cover and you were short this past week on the Qs, wow, you got run over, because that is a big range, 5.7% to be, if you buy at the bottoms. If you're short at the bottoms and you don't cover, you're holding this over the weekend. Ouch, sorry, because there's an unfilled gap right there now. All right, on the daily, we'll take a look at that. We got unfilled gap here on the daily chart. Let's see where, right there, getting very close. So let's draw that in right here. We'll draw that in green, as we always do. Okay, so 230.27, we got an unfilled gap on the Qs, and very likely now that's the target, that they're intermediate target that people are gunning for. And then we have another unfilled gap up here. So those are very, very nice areas that are then very close to those all-time highs. And yeah, that's another, that would definitely play into, let's see this high. Let's see here. This closes at 236.98 high. Yeah, so another unfilled gap. No, it's at 98. High 95. Close. Yeah, so we got one more unfilled gap right there. So 3 unfilled gaps right there. Boom, boom, boom. And so that's confluence. That's confluence. Now you have areas here that you definitely have some traders gunning for to fill those gaps. So we're looking very strong for the Qs. I'll just quickly show you that red dog reversal, that red to green trade that happened on Monday on the Qs, because it was even more aggressive. And then we'll skip the other indices. But look how strong they defended the buyers. That is here. Okay. So remember SPY, how it actually went red on the first 15-minute chart. Well, the Qs didn't even go red that first 15. Literally, see here's the prior week's low was 211.21. It only slightly broke below that low, 211.13. So only 8 cents below, right? So they gap it down. They immediately, they immediately forced them to cover. So if you got short there, that was the wrong index to short, because that was the strongest of the bunch. If you want to try to short any of the indices, it probably would have been the Russell, maybe the Dow. But they immediately, run those guys over who try to get short, and we know the rest of the game now. The rest of the how that game played out. They took it to the upside for the rest of the week. Okay, so there's your daily chart, your 15-minute chart. On the 2-day chart, just one thing to end off here. You got Momo. Right, so on the 2-day chart for the Qs, Momo up. All right, so you got a Momo up condition now, gunning back to these prior unfilled gaps. Dow got the same monthly picture, outside bar down, inside, and the Dow. Just one thing to look out for is this here. We got strength here, inside bar up on the Dow. Okay. Inside bar up on the Dow, so they did inside bar break to the upside, and they did the same reversal pattern on the daily chart. So right now, buyers in full control, broke above the prior 50. This had acted as a bit of a resistance for the week, right? So that 50, look, so you have this confluence of areas here, right? So this is like a 8 period. You got the 50 period, and you have the monthly open, all right in this area here. It was kind of acting like a bit of resistance. Then on Friday, pop right above it. So, as long as you don't break back up below again, stay above that area, you're above the 20, you're basically trending to the upside at this point. The buyer's very much in control. Russell now. Let's talk Russell. Same thing as the rest of the indices, just slightly different monthly picture. Inside month for the Russell. Do want to mark that in though, because you want to see how that might break if it breaks to the upside. Okay, so there's our orange line for our monthly break. And the Russell did do a slight break below again, but they did this exact same reversal pattern. 2-day chart, also just like the Dow. Inside bar up on the 2-day, right? So inside bar up on the 2-day. There it is. And that means we have continuation now. Watch for continuation, okay? And they did the exact same reversal pattern on the Monday. All right, so they all did it. When you see all the indices do the same thing, that means the buyers are buying across all equity markets. Then you kind of have this. You can just it's basically a confluence of signals there, and so that the buyers are in full control this past week. Let's talk about the TSX. TSX had a slightly less volatile week because it stayed inside week. So same pattern though as the Dow and the SPYs. We got that outside bar down, inside for the month. But the week itself was actually pretty contained. It was contained inside the prior week's ranges. So now we adjust our ranges. We want to see this coming week how it breaks. Okay, so it looks quite bullish so far, right? But you do want to pay attention though, right? If it breaks below this low here, that will definitely change the picture. If not only you have to break below like we saw this past week, you actually have to stay below. So you have to break below, you have to stay below that area. Because if you just break below, you pop back up, that is not, that means the buyers have taken control again. But, at the end of the day, you still got this quarterly open way down here. It's very difficult to change this quarter red now, unless you can break all the way back through this range again, which seems highly unlikely. But keep watching that. That will be something important to look out for if you do begin to get a reversal. Okay, because it's still inside month. It's still early enough in the month where you could, if it stays inside month, because here's that orange line, right? In order for the inside month to remain, it has to stay inside this range. You see that range here, the orange and orange? The only way it can stay in that range is it has to at some point roll over. So you get a rollover, that would create the inside month, right? So if you either break below this low here, or if you break above this high and it comes back through the range again and breaks below that low, that's your reversal. You come back to the range a bit and it stays inside month. Okay? So that's your weekly chart in the TSX. Just like the rest of them, same sort of reversal pattern. Although on the Monday, they actually were quite aggressive and they did that reversal signal, but actually created an outside day on Monday. Okay, so there's your outside day. On Monday, reversal pattern. I just want to quickly see what that looks like on a lower intraday chart. Let's do that. Pull up that 15 again, see how they force the bears to cover on the 15. So let's see here. If I can somehow make it less small for us so it's more easy to see. That's the Monday there, right? So that's April. Where's our outside day? So, do we have an outside day on the Monday? So this is the first. Yeah, sorry, right here. It's very tight. So sorry, the volume is actually kind of messing up our. Let me see if I can turn up that volume for a second. No, it's not really making it any better. So it's a little tight to see. So I apologize. But the outside day is right here. It's very tight. So you can see it opens up, it gaps down. It's very small, so I apologize. There we go. It's getting a little better there. Okay. There. So here. That's the beginning, that's the Monday. Right? So there's your weekly open. Weekly and a daily open, that purple line. It opens, trades lower, pops back up, and then it comes back into the range. So that's, comes back, turns green, right? And here's the prior day's low, right there. And there's your reversal. So they really, they created the outside day there on the Monday. And then it pretty much has drifted higher for the rest of the week. Although, again, still inside week. Let's go emerging markets. Emerging markets slowly recovering as well. So still inside month though. So outside bar, it's Momo down still. So here's the Momo down condition on emerging markets. Momo down, inside month, sitting right in this broad information. This is what we're watching for. Can it clear and get back into the range here? It has to do that has to do that by breaking above the prior month's high. Okay, so we're watching that level there to see if we can get back above there to come back through this range here. Okay, that's going to be the first step, because this had acted as resistance, this lower trend line, but it did break above. It's currently trading above that now, and you're going to get real confirmation by breaking above April's high there. Okay, for the week, inside week, just like the TSX, very choppy stuff, kind of tight, but the Monday was actually an inside day for the EEM, and now you can see here on the monthly. The monthly, it's trading above the quarterly open, above the weekly open, that's a purple line, and above the monthly open. So they reclaimed the monthly open there, because we did break up below that on the prior Friday. But now for the rest of the week, other than that Monday where we went inside day, gap down. It wasn't even a gap. It was a gap down. Let's see. It closed here. It wasn't a gap down. So that was it. So it closed at 35.32 and opened at 35.46. So that's actually a gap up. So that's a great, great tell there, because most of the North American indices had gapped down. This guy actually gaps up. It was inside day, and then the rest of the week it stays above that monthly open. Full time frame alignment trading to the upside. So quite strong there for EEM. Let's see how it breaks that range, how it breaks the weekly ranges for the coming week, because now we got that inside week, and that will tell us a lot based upon which side of that inside week things break. TLT, the risk is definitely coming off here, right? So the U.S. government's basically printing a lot of money. Yields have been going back up, and that means the prices of bonds have been going down. So let's talk about this. Outside bar, inside bar, we were asking which way is it going to break, because this is a Bollinger Band walk, right? There's your Bollinger Band walk. Could it continue? Nope. It broke below there, but it popped back into the range. It's not like it fell apart completely, but I think it's a good chance now that we come back down here and retest this prior brown information trend line to the downside. Okay, so there's your outside bar. Inside bar, so far to the downside. Weekly chart, we got the reversal, right? 2 weeks ago we had the reversal. Momo up, it got extinguished 2 weeks ago, right? When this bar happened, because now we wanted to see that low get taken out. It happened this week, right? Because that is the idea of coming back through the range. It did that. Momo up. Anybody who chased, they got stopped out now. They put their stops in this range. Okay, so there goes the TLT product, and on the daily chart, it's just a slow melt. Okay, so inside bar down and down. Hit the 50-day, popped a bit for one day. So with Thursday was a bit of a big day for TLT, but on Friday, buyers and sellers met in the middle. No one could win that altercation, and so now it's a inside day. We want to see how this breaks on Monday. Is it inside bar up, inside bar down, or inside? Gold now, MGC. This is going to be interesting to watch this coming week, because gold has been in a bit of a holding pattern now. So now with gold, there's a big picture, because this is the big picture everyone needs to see. Is that gold is currently trading Momo up, right? So this is about a perfect environment as possible as you can get for gold. If you throw in a bit of extra, maybe a little more geopolitical risk, then maybe that you'd be better for gold. But in terms of the money printing, you cannot ask more as a gold bug. So that being said, we want to be very clear about that. Is that if the gold trade starts to break down, that means something's not right, right? So if the price begins to fade here, and you have the fundamentals appear to be perfect for gold, but price is not showing that, that's when you have to really divorce your opinions from the actual objective price action. So far, the objective price action is backing the fundamental story. It's Momo up. People are bidding up and chasing gold here, right? So they're buying it up, Momo up on the quarter. So with that bigger picture means we're looking for the lower time frames to eventually give us a good opportunity to buy. So currently, inside month. So the prior month, it broke the prior high. Momo up, currently inside month. Then here we have 2 consecutive weeks in a row, right? So we had broken above the Bollinger Bands. It could not stay above. We come back in, test the 8-period moving average, go inside now. So very tight this past week, this will make for a very interesting week coming up, because at some point this volatility will expand. The market works in expansionary and contractionary waves, and at this point here, we're waiting for this thing to expand once again. Contraction. How does it break that sort of a consolidation? So we're just watching to see how this week will break, and looking for signals that are going to help us get in either prior to the break or right after the break, looking to enter on some sort of pullback. Okay, so that's the game plan for gold. I'm going to delete some of these prior lines here. It's been choppy trading for gold so far. The reason that is because we're trading inside weeks, right? It's very contractionary. So we'll expect that expansionary period. And now this one looks interesting here. Just looking at the layout. This prior week's high is marked in purple. So if you can get back above there, this can trigger this prior week's high to prior week. We can get that inside break to the upside on the prior week's high. So right now, Momo down on the 8-hour, break back above there, potentially take out that pivot high there. See the 6-hour chart? Yeah, so it's coming back in. 4-hour chart. All right, so back in the range here. So that's how I begin to do my analysis for the gold, for any asset class for that matter. I'm looking to see how we can break outside of the ranges, or whether we stay inside the ranges. And right now, the only way you can break outside the prior week's range is by first taking out that prior high there, because price action in the end is fractal in nature. And I've said it many times already, but this is why we do our analysis across multiple time frames. So because it acts as basically a big game of dominoes. The moves will initially trigger on the lower time frames and eventually make their way outwards to the higher time frames. So we'll see that reversal happening on the lower time frames first, then come back and then take out that prior high if it's going to do an inside weekend up break. Otherwise, it's Momo down, right? So that's Momo down on the 8-hour. If it keeps going Momo down, you can take out the prior week's low if it keeps doing that, right? So that's what you want to be watching for, is for both potential scenarios to perhaps play out or something new to appear, and just a matter of being open to what's unfolding, and then to responding to it in an appropriate manner. So there's MGC. So like I said already, very, very strong fundamental picture for gold. The only other asset class, and people are finally talking it up now, people are saying, you know what, it's even better than gold, maybe Bitcoin, because of its scarcity. Bitcoin's the halving, is halvening, or however you want to say it. Some people call it halving, some people call it halvening, is happening this Tuesday. If you don't know what that is, I'm not going to spend a lot of time talking about it. You can just Google it. But basically, on Tuesday, there'll be a lot less supply of Bitcoin, and people have been buying it up. So the question is it a buy the rumor, sell the news scenario, or the people keep buying it? This past week, the big news is that Paul Tudor Jones, legendary trader, spotlighted in the Market Wizards book, his firm, has invested in Bitcoin futures specifically, not Bitcoin spot, but Bitcoin futures traded on the CME. And I'll take his, I'll paraphrase what he said, but if he wants to get in the race, you pick the fastest horse. So between picking, in terms of the fundamental story, between gold and Bitcoin is frankly the faster horse than gold. So that's what he's decided to bet on. I'm sure he's got gold holdings as well, but it looks like he's invested a decent amount, I think in the single digits in terms of percentage portfolio numbers. But they manage a pretty large book over there at his firm, so that's a pretty significant outlay of Bitcoin futures. So Bitcoin, this past week cracked 10,000. At one point, you had even closed above 10,000. So it looks pretty strong right now. Here's the issue though, and I am long Bitcoin, just full disclosure, as well as a bunch of other coins. You saw last week in the video, I was long 14 coins going into this past pop. So I'm still quite long cryptos. But here it is. Bitcoin, big picture, outside, inside on the quarter. Can you go, if you break above Q1's high, that's going to go Momo up, and that's when you start to see people are chasing. So for now, it's it's still it's still inside the prior quarter's range, so not quite full expansion yet. On the monthly chart, Bitcoin, you got the the high of the prior month broken. So this past month, this past week, we broke above April's highs. And you can see the weekly chart now just progressively green. Green, 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 green. So they really, look, that we had a huge sell-off in the month of March. And basically they fought and clawed their way back. This high here is 10,022. That high here was 10,045. So had you gone short in this sequence and put your stop there, you got stopped out this week, right? So, elevator down and then a slow escalator back up again and stopped out anyone who put their stops right there. Okay, so that's what you typically see with trading. People put their stops above, prior bars, and that's why they take out those pivots. So they did it. That's what it's trending upwards now. And on the Bitcoin chart, on the daily chart, here was a very nice signal right there. Outside bar down. So look, this is why I'll say it this way. You never want to chase price, right? Especially in a asset like Bitcoin, because it's dominated by FOMO traders, people who chase price. If you chase price, you usually get stopped out. So had you bought, this Bitcoin broke out here, right? This is when I was talking about Bitcoin more aggressively. It broke out and it kept going. And if you're buying into here, right, you're buying the break of this high, or you're you're buying the break of these pivot highs, you have to expect it's going to go higher. It has to literally stay above the Bollinger Band. That's what you're betting on. As soon as it breaks below that low, it's going to come back into the range and stop at any short-term traders. So you buy up here, that's poor trade location. I've said it many, many times. It's very, very poor trade location, because you're the one who's basically the last one in, and that means you're going to be the first one out because your stops are going to be the tightest, right? They're going to be, the furthest up, and you're going to be the first one to get stopped out as soon as there is any kind of liquidity break. So here, they stop out all these short-term guys. Short-term meaning the guys who got in last, right? Outside bar. And who bought that, made a bit of money when it popped up, but as soon as it comes back through the range, they got stopped out, and this bar takes out these guys, right? So here, you wait for the pullback. Outside bar down. There's your Momo down condition. People get scared. Oh, there was Bitcoin again. That was it for that rally. But as soon as it breaks above there, there's your entry. Okay, because you're back to full time from alignment. Quarterly up, monthly up, weekly up, breaks above there, pow, back above 10,000. So now once again, people chased, right? They chased once again. Inside bar broke up here, broke below the inside bar. Now, inside bar down. So we get a decent signal to break above this high there. The only issue here now is that we've had a pretty decent run already on the weekly chart, right? This is not the first week up. This is, literally the 1, 2, 3, 4, 5, 6, 7, 8 consecutive green weeks. So you remember that red line right there is the prior quarter's high. So you're already broken above the prior month's high. If you break above that red line there, it's going to create the Momo up on the quarterly chart. So that means people are chasing. And, frankly, there's nothing wrong with chase, but you just have to be aware that you're probably going to there's a very high chance of getting stopped out. So you got to be prepared for that, meaning you either position size differently, that is scale down, or, you wait for a pullback, even on a lower time frame to get in, versus chasing right into highs using, your daily time frame. So, wait for the pullback, and then there's that red line again. You're not far from that red line. That's 10,491. That breaks above there. That's really not far, right? That's less than $500 away. You break back above there, then that's going to really trigger some FOMO, some Momo. Okay, so there's your Bitcoin chart. So let's wrap up this week's video now with a few fast fire names. I have a lot of names that I've written down because the markets are frankly, they're flying. The equities markets. It's really hard this past week to find any names that were not doing well. Pretty much everything was green. So I'll just show you some names I think that are interesting. So I think oil here looks quite interesting because you have a bunch of names now that look like they may have bottomed and they can potentially pop higher. Look at the oil names like CRC, DNR. They all look the same because it's all inside. Look at DNR. They got earnings right here though on the 11th. But outside, inside. Look, VLO, Valero, same thing. Inside. This is inside week there. But look, inside month on Valero as well. That could pop above that. So look, Momo down. Inside month now could pop up. So we got a lot of potential stuff on the oil front. Okay, Costco, interesting name. Broke down this past week. It actually went inside bar down, but sets up a potential inside bar reversal back to the upside if you can break above this past week's high right there. What's interesting about that is that you actually have on the monthly chart outside, outside, inside, inside. So a lot of consolidation going on here. This will be very interesting for Costco now to see how it breaks out of that range. Okay. Here's one chart I'm watching very, very carefully. I talked about it already, but gold names looking very interesting, right? Because we saw MGC already, the micro gold contract. Look at NUGT, the gold miners. Same thing with the JNUG product or the GDX and GDXJ products. But Nugget really triggered a very nice signal this past week. If you look what happened here on the monthly chart, here I'll draw it in very quickly here. So there it went inside month and up after going Momo down, inside and up. So there it broke above the prior month's high. Here's your monthly chart. On the weekly chart, it actually did it inside weekend up. Okay, so inside weekend up triggered. And on the daily chart, what did it? This daily chart, this daily signal here, the outside inside, right there. The outside inside broke above that. So I'm long several gold mining ETFs and a gold name. So I definitely want I'm watching that sector very, very carefully. In the marijuana sector, this is one weak stock that I could, one of the few weak stocks I could find. And that was CGC. So inside month so far, potential weak inside week here. Well, it is an inside week. Potential break to the downside on this inside week. All right, so that's I'll just draw that in purple. That's from my weekly lows. So there, if you break below this inside week low here, you're still above the quarterly open. So not aggressively bearish, but I don't like this structure here because it's a grind up. You got a shooting star now, and you break below that, you can potentially come back through this range. The issue is that are people going to step up and defend it because you're still above the quarterly open? It's like I said last week on the indices. Even if you break the downside, you're still above that quarterly open. So they're going to be dip buyers. And this week we saw what happened. The dip buyers stepped up on Monday. Okay, so maybe what I'll do now is I'm gonna, because we're running a little bit long, I'm just gonna show a couple of monthly charts here, and then we'll go through our stars and dogs. So I'm gonna review some of the monthly charts I showed last week. Look at this one here, TWOU, right? I showed the outside inside. It popped up, took out that pivot high already, right? So that's what they're all looking like right now. All the ones I shared last week, they pretty much look like that. RNG went to all-time highs this past week. Outside inside, popped up all-time highs. GDS, same sort of resolution to that pattern. Outside inside, coming back up. And Alarm Force, the same thing. Outside, inside, and popped up, going after that pivot high there. Interesting name here would be maybe retail. Remember, we have the retail number coming out on Friday. So retail sales right now. Here's the ETF XRT inside, right? Inside month, we could pop up and take that out. We'll see what happens. SLV, again, another ETF to watch here if you want to play that shiny metals story. Outside and down, you break above that pivot high there, and there's your signal on the monthly time frame. Workday working very well, potentially coming back up to the range. Outside bar down, inside bar back up again, maybe going after that pivot high, 202. Okay, let's talk about our stars and dogs now, and then we'll wrap things up. Stars, man, so many names that are flying this week. It's hard to pick a few, but I'll just pick the ones that statistically are doing well based upon a modified Sharpe ratio. eBay starting to trend very, very well. Okay, so you can just see by the moving averages, but I'm using a Sharpe ratio to do it. Outside, inside, up, it was gone, right? So this thing is flying after earnings here. 29th, right? It's gone. It's Fastenal. So there, 4 or 5 strong green days. This trend is accelerating. SFIX, they really forced the bears to cover here because when outside week, Monday, the same reversal pattern as the indices, and by Friday they had taken out the prior week's high. There's your outside. Sorry, I said outside week. Shouldn't be inside week. Outside week. And then I guess everyone's using Peloton nowadays. The bike riding company, or the bike riding manufacturer, game or fitness equipment maker, however you want to call it. And this thing is going, full bonkers to the upside. Look how strong that is. There's your earnings day right there on the 6th. Pow, gone. A lot of people using that during these times of self-distancing. Now, the dogs, hard to find, but I found a few of them. JCPenney, So far, not seeing a bump in retail. Frankly, I don't think they have any stores even open, but that hasn't stopped other companies from making money. But JCPenney right now, wow. I don't think it's worth trading this thing. It's only 17 cents, but it just shows you some names are not working, right? Some retail names not working. Hertz, another one. So people not renting cars. So most of the week was spent in the red. GE still not doing so well. So ending the week near the bottom of the range. And airlines, right? So Warren Buffett disclosed that he covered his longs. And this week, we might have done a reversal here actually, or may have caught the bottom, or might have sold at the bottom there. But let's see what happens there. But Delta Airlines and things like American Airlines still way down. Trend is still trending downwards. One final name to watch related to airlines, but aerospace, Boeing. Boeing sort of consolidating, but a slow downward drift to the downside here. So let's see what happens to Boeing. All right. With that being said, I want to just thank you once again for listening to this week's video. Thanks for coming out each week and spending the time. If you enjoy the videos, I would really appreciate giving the video a big thumbs up. That helps the videos get more eyeballs. At the same time, if you want to be notified when the videos drop, you can either subscribe on YouTube by clicking on the big subscribe button, or head over to the blog, thetradingedge.org, and you can actually sign up to the newsletter there and be notified through my weekly newsletter, where I send out the video as well as the things that I'm looking at and some of my perspectives on trading and outside of trading. Other than that, I just want to make sure, just wish everyone the best. These times are we're living in very interesting times, and I hope that you're staying safe, you're keeping your family safe, and that you're staying not just physically healthy, which is important these times, but also that that you're taking care of yourself, your mind, your body, and your spirit. So I wish you a great trading week, happy trading, and see you again next week. All the best.